Hello and welcome back to my channel of investment and income. This is in continuation with the last video of substitute to bank FDs and how to invest in index. I had said last time also that there will be some queries. I have received some queries. I have also received some praise because people were not aware that such a thing or such an investment of this sort is also possible. Rightfully, everybody who is not up to the market in their everyday connection will not know these things. But people want some more clarification or support for their confidence to build up in investing in index. The base of our index, when I say index, I always refer to Sensex. But the investment is done in Nifty and Bank Nifty. The base of the index is 1979, it is taken as 100. The inception period and the publishing of the index was from 1st January 1986. So we refer the word inception as on that date. Since the inception, we have seen many index shattering events. For example, the Harshad Mehta, the Ketan Parekh, the subprime of 2008. Before that, about in 1998, there was the Asian payment crisis. Then we saw a big fall in 2013 before the general election. Then the Notbandi, and one of the biggest and the severest fall was in March 2020 due to the COVID pandemic and panic around the world. Even after all these falls, we have seen index as 50,000. From the base of 100 to 50,000. Now I will give you one more example. Since those early days, when we call the Harshad Mehta days or the 1991 main change where the structural economic changes took place, from that time till today, there are only 7 companies as on date which are in the index that were there in those early era. Means the rest of the companies are not there in index. Some companies like Premier Automobiles has just shut down. Some companies, if you see like Great Eastern Shipping or Hindustan Motors, practically has given no returns in the last 20 years. If you compare with other, it is no return. But still, the index is at 50,000. So this is proof enough for you to understand that if you invest in index, it is pretty safe. This is in comparison to the FDs, if you can't make investment in stocks directly. Now let us take one more example of how it is safe and profitable investing in index. Companies come and go, index is stable. Some companies are removed, some are added. On what basis? It is not necessary to go into detail right now, but it happens. Every few years, few months you hear that this company is removed, another few companies are added. When the companies are added into the Sensex list, what happens is the company's valuation all goes up in the minds of people. So its prices also start rising. Second thing is, certain fund managers for certain funds mimic index companies in their portfolio. So if a new company is added, they will have to add that company also in their portfolio equivalent to the weightage that company has in the index. So that also makes the prices of those companies rise. So indirectly the index, it gives a flip and a support to index also. So that way you are one more step safe. And the last important step to know is, in the last 20 years, a lot of software, other technology and banking companies have been added to the index. As on date, this company's valuation is about 40% in the valuation of the index. Now these software companies still have a clear-cut idea of their profits going up in the coming years. So what will happen when the profits go up? the company's share prices also go up. Once that goes up, even the index value goes up. So in the future, because of these companies, technology, software, banking, and in future there will be more insurance companies also. So it will be still safer investing in index. I hope you understood the meaning and the safety behind this. If there are still queries, I will still clarify them.